Hello traders, welcome back to the channel. This is Vishal and you're watching Weekly Sectoral Analysis. Before I start today's video, I would just like to share one small information that recently I have added two more sectoral indices. One is CNX Energy and one is PSE index, which I added last week. So with all the other sectoral indices, I'll be even analyzing these two sectoral indices as I felt that they're important. And in fact, PAC index was actually demanded by one of my subscribers on YouTube. All right, so let's start today's video. If you look at the weekly time frame chart of Nifty Spot, it is very clear that the trend is up. Prices are trading above the dual moving averages, but it is visible that there is a fair bit of distance between the price and the moving averages, and it is visible that it is a little bit overstretched on the upside. Yes, RSI is certainly not above 70, but as I said, it is overstretched and not overbought. So some sort of consolidation or sideways movement would be more desirable at this moment rather than just one-way rally continuing. And the responsible sector for this sort of movement is certainly, you can say, the FMCG pack especially, and second one is auto pack, because these two sectors have rallied pretty nicely, and even the consumption pack has rallied vertically, and I'll come to all these sectoral indices later in my video. If you look at the daily time frame chart of Nifty Spot, recently we had a negative divergence, triple negative divergence. If you have a close look at the prices, we had higher highs in price and we had lower highs in RSI. But recently what has happened on Friday, that on Friday suddenly we opened gap up, and this gap up was almost above the 50% of the entire real body of the Thursday's candle, and then we closed much higher. This sort of candle is generally, you can say that bears are panicking and possibly they're trying to cover shorts or something like that. And in fact, this particular high of RSI was also taken off. If we see consistent buying continuing in the next couple of days, or maybe at least the next 2 to 3 days, then the possibility that this negative divergence, which is over here, which could possibly drag Nifty Spot lower, would be negated and market will continue to stay higher. But as I said, by looking at the weekly time frame charts, it is very important that rather than a one-way rally, some sort of consolidation is extremely important. And when this sort of consolidation happens, it is but obvious that few sectors will probably go through profit booking, few sectors will go higher. So possibly there could be some sectoral rotation going on in the market. Let's have a look at the Bank Nifty. Bank Nifty was exactly, you can say it was like Nifty, not exactly like Nifty, but somewhat like Nifty. If you see that there was fair bit of distance between the price and the moving average, I'm talking about this candle. Now, if you check Bank Nifty, even Bank Nifty had some sort of distance between the prices and the moving averages. And if you check the RSI has been completely flat. Why? Because in the last 1 month and one more week, you can say last 5 weeks, Bank Nifty has been consolidating. The prices have stayed higher, but more or less, I should say that it is consolidating, and it is really good. Yes, it could be frustrating for short-term traders that they are not getting any sort of direction, but for a consistent rally in the market, after a rally, some sort of consolidation or a price dip is important, and only then we can continue on the upside. If you check the last candle over here, this has been a hanging man, but I would like to say that this is actually a hammer, because it has come up at a place where there is some sort of support, which is a 23.6% Fibonacci retracement. And I believe that prices have understood that there is some sort of support at lower levels. If this particular support is not taken off, 43,200, and if we continue to consolidate maybe next couple of weeks, then there could be decent chances that Bank Nifty could go higher from here. But obviously, we need a trigger on the upside. We need a breakout on the upside in the price. All right. Now, if you look at the daily time frame charts, yes, you will see that this is a very good, nice green candle, but we need to go in the hourly time frame charts. And if you see in the hourly time frame charts, the trend is flat. And as per Fibonacci retracement, there is a fair bit of price cluster over here. So according to me, first of all, the price needs to close above this particular cluster and in fact this trend line also. Why? I'll try to magnify the chart in the daily time frame chart and I'll show you. You can see that this was a breakdown, and if we want to restart a fresh uptrend after this short-term breakdown, we need to close above this particular level, which is around, you can say, at least 44,135 or 44,225. Once we close above this with a big green candle, things will again reverse on the upside. And if you remember my previous video which I shared on Thursday, I clearly mentioned that the early signs, or at least you can say the 50% of Friday's trading session would be a pullback. After the pullback, since there was a resistance over here, there is a chance that markets could come down. So if you see properly, there is a lot of wick left over here. Prices have not been able to close above this. So it seems that the resistance which I shared with all of you has been respected. And if market wants to go higher, we need to close above this resistance band. Only then we will be able to understand that this entire reversal has been important for the bullish traders. Let's have a look at the PSU banking pack. PSU banking pack has been pretty strong in terms of trend, but it is lacking momentum. RSI is not able to surpass 70. In fact, it is very, very flattish. If you check the prices over here, they have given a very nice move, and after that, it has been consolidating. I think the leader of the pack certainly over here is SBI without any doubt. So once I guess this particular stock starts moving on the upside, then maybe we'll be seeing some current in the other stocks as well. But at least SBI needs to make some concrete move on the upside. Private banking pack. Private banking pack, if you have a look, it is looking very much similar to the Bank Nifty charts. You can see very, very similar, because Bank Nifty is having, you can say, a sort of a hanging man, and private banking stocks also, it is a doji, but it has a wick which is bigger on the downside. Again, I would say that private banks also need little bit more consolidation, maybe 1 or 2 weeks. And if you check, there is some sort of pattern visible over here, and there has been a short-term breakdown. And if you check the RD time frame charts, if you want the momentum to continue, again, I would suggest that the prices need to again close back into this particular pattern and prove that this particular breakdown, short-term breakdown, was a false breakdown. Otherwise, what will happen is that the prices will retest and again come down. So, prices need to once again close back into this particular pattern and prove that it is a false breakdown. And one of the stocks which is looking interesting to me as of now is ICICI Bank. And the reason for that is, if you check properly, the trend is flat. I certainly agree with all of you, but it is still at a support. Once it closes below 924 or 920, then yes, things can change. But till the time, I guess, ICICI Bank is above 920, 924, a short-term breakout in the hourly time frame charts, or maybe lower than that, could result into a decent up move on the upside, and it could help Bank Nifty to travel higher. Metal pack. Metal pack has been impressive, as I had shared with all of you, that as per Dow theory, it has been slowly and steadily trying to start a fresh new uptrend. I think that point of time, it was 2 to 3 weeks back over here. But as of now, you can see it has been very, very impressive, right? So you can see this is the first leg, this is the second, this is the third leg, this is the fourth leg, and this is the fifth leg. Generally, either the third or either the fifth leg is bigger. Now you can see the fifth leg is very, very large, but there is some sort of caution. The reason for that is that we have approached the 61.80% Fibonacci retracement. I'm not saying that this is a top or something, but at this juncture, certainly middle pack needs to consolidate. Probably even some sort of partial profit booking would be a welcome. If this particular pack tries to consolidate, come down, hit support level, and then if it once again starts trending higher, then it will be a very good chance for swing traders to get into the middle pack. Obviously, the stocks to look at could be Tata Steel. All of them are currently, I should say, overstretched. So they need to consolidate and come down a little bit. Even JSW Steel, you can see the way it has performed. Again, it needs to consolidate and come down, cool off, and then again, once again, start a fresh new rally. And if you check, see the strength in the weekly time frame charts is really amazing. Fine, let's have a look at the auto pack. Auto pack, I should say that it's very much strong uptrend, certainly. But if you check, the RSI is around 75, and this rally has been a one-way rally, and some sort of consolidation profit booking is certainly important over here, because no index or no stock can continue trending higher without any consolidation, because in this entire rally, if you check properly, there has been only two small red candles. A steady rally is always better than a very large one-way rally, right? So we need to understand stocks like, I'll just share the stocks with you. Yeah, here we are. If you check at Maruti has been pretty much overstretched in the weekly time frame chart. In the daily time frame chart, things are looking fine, but it certainly needs some sort of consolidation profit booking, because if you check last couple of weeks, candles are inverted hammer, and this one is sort of a spinning, not a spinning top, but looks like a high wave candle. Some sort of profit booking or consolidation is very much important right now for this stock. Tata Motors also, if you have a look, it's a little bit overstretched and it needs to consolidate and probably come down a little bit. But yes, it's in an uptrend. If you're a positional trader and if you're holding any stocks which are in an auto pack, then you need to continue holding them with a trailing stop loss. But if you're a swing trader, because both these trading styles are completely different, if you're a swing trader, you need to understand that you will need to wait for better risk reward ratio. Once they come down and consolidate and trend higher, probably you'll have a better chance. Eicher Motors has also trended pretty nicely, but recently the stock has come down. It has hit the support level, and the support level is not just at this 3520 level. In fact, it is a band, because this is a big gap over here. And if you check, even the weekly time frame chart is in an uptrend and they have rise, and the price has retraced a little bit. So if you see a short-term breakout available in Eicher Motors in the shorter term time frame charts, you could probably fancy your chances as a swing trader. Again, M&M, Bajaj Auto, all these stocks are in an uptrend. As a positional trader, I would suggest you can continue holding these stocks with trailing stop losses, but as a swing trader, you need to wait for better risk reward ratios. And if you remember, I have been sharing my view regarding Ashok Leyland since the price of 149, and the stock recently on Friday tested around 167 or a little bit higher than that. Now it is up to you as a swing trader. If yes, it's a very good profit of almost, you can say, close to 19 to 20 rupees on a stock of 149. So it's up to you. If you feel this particular profit is enough for you, you can book out your profits and get out of your trades, or else you can also continue holding this particular stock with a trailing stop loss. Okay, let's have a look at the IT pack. IT pack is one pack which is looking very different when we are comparing the daily and the weekly charts. In the weekly time frame chart, it looks that the bears are in control, and in the daily time frame chart, it looks that the price is consolidating. Once we give a breakout above this zone, then you will be able to say that the bulls are once back in control. So it's a fight between bulls and bears, but still there are pockets of strength over here. One such stock is Coforge. Coforge has given a decent short-term breakout as a short-term trade for a swing trader. It's already in an uptrend. I think a close above this recent high will result into higher prices. One more stock is Persistent Systems. The overall, you can say that the strength in this stock is visible from the weekly time frame charts. In the daily time frame charts, the problem is that there is a big gap over here. I should say the basing pattern in the weekly time frame charts is looking pretty fine. In daily time frame charts, what we can see is there is a decent support over here. Once this gap is filled, probably there's a decent chance that the stock will keep trending higher. But if the stock trades below 47.80 or 47.40, then the positive view will be negated. Finance pack. Finance pack, I should say, is once again consolidating. You can say sideways move even over here. So as a trader, I would like to stay away from finance pack right now. Once this consolidation is over, certainly we will, try to little bit check out which particular stocks are looking more attractive with a risk reward ratio for a swing trade. FMCG pack. FMCG pack, again, one of the leaders and responsible for Nifty to stay higher. One stock which I like currently is Hindustan Unilever. Hindustan Unilever recently has been able to show some sort of strength in the weekly time frame charts. Even in the daily time frame charts, the stock rallied. It retraced. Again, it gave a short-term breakout. Again, it has retraced. Again, it is trying to go higher. Possibly it needs to sustain about this recent high. Once this happens, I think prices will continue going higher. Consumption pack. Consumption pack, as I said in the starting of the video, it's extremely overbought. If you check the daily time frame charts, there has been fair bit of time when RSI has stayed well above 70. Probably at times the RSI has been more than 85. It's very much overbought. And even in the weekly time frame charts, you can see that RSI is well above 70. Certainly some sort of consolidation or a profit booking would be welcome at this juncture. Infra pack. Infra pack, again, I should say, as a trader, if you're holding infra stocks, as a positional trader, you can continue holding them. But as a swing trader, I would not like to jump in at this moment, certainly. Probably a dip or a consolidation will improve risk reward ratio, and only then I would like to step in those stocks. Pharma pack. Pharma pack has been very pleasant, and the way it has performed recently, it's very good. One stock which I like right now is Sun Pharma. This is certainly not the right time to buy this stock, and the reason for that is you can see consolidation is going on, and buying any stock when the stock is consolidating is very wrong, because it can happen that before even the breakout comes, the stock can go lower. And once again, if you check the weekly time frame charts, you can see a pattern of lower highs and lower lows still continuing. So some sort of short-term breakout in the shorter term time frame charts will be better, and only then you can time your trade in Sun Pharma. Realty pack. Realty pack, again, there are few stocks which I track, but if you check the index, you can see that the prices are much away from the moving averages, and it is certainly overbought. And if I convert the price in the daily time frame chart into a line chart, you can see a clear-cut negative divergence visible over here. So certainly some sort of profit booking could be visible in the next week in Realty pack. Now, this particular sector recently has shown a lot of strength, you can say. As a positional trader, you can continue holding these stocks. Certainly, there is no issue. But as a swing trader, this is certainly not a time to probably jump into these stocks. Just have a look at Tata Power, or if you check BHAL, check Power Grid. Again, all these stocks are continuing in an uptrend. Even REC Ltd, this has performed very nicely. NTPC has also performed very nicely. If you check all these stocks, certainly there is one stock which is BAIL, which is moving very, very slow. I should say that a close above this high, above 88, probably could result into some momentum. Otherwise, I should say that the stock will go higher, but it could be little bit, you can say, lack of momentum will be visible. If you check RSI, it is showing the same thing. It's not just one way up like this. But other than that, I would suggest that even PAC index certainly needs some sort of consolidation, not as much as consumption or autopack, just a little bit. Once that consolidation or profit booking is over, again, there's a possibility that the prices will keep continuing higher. Mid cap. Mid caps, again, you can see one way up move, RSI well above 70. The daily charts, you can say RSI is around 87, and certainly a time where some sort of consolidation profit booking is very much important, and even prices are near this 161.80% extension. So some sort of profit booking would certainly be nice at this moment, right? So we need to understand one thing, that yes, trend in Nifty in overall market is certainly up, but sectors which are looking extremely overstretched or overbought, they need to go for a consolidation or a profit booking. And sectors which have not performed recently, you need to concentrate on them. So maybe some sort of sector rotation might be possible in the next coming week. Keep your eyes open, be vigilant, and once you see that a particular sector is moving, try to find out the leader in that stock, and if you find a breakout, you can surely jump into it, right? So I hope this video has been helpful to you to understand how markets will move in the next week. Take care, stay safe.